Welcome back, and today I'm going to go over a pro forma numerical analysis on our Jacksonville, Florida single-family rental co-living new construction. All right, so this is very, very exciting. So this is a very important detail, deep dive into the numbers. So I'm going to show you some off the wall, uh, just historic numbers, which is one have never seen before. All right, so without further ado, uh, let's uh, let's go over it. So again, this is a Class A new build turnkey co-living model. This is absolutely incredible what you're about to hear and see. So with that in mind, let's go ahead and uh, go to the first step. All right, this investment model is available here in fast-growing Jacksonville, Florida. So we have a co-living, rent by the room, new constructions, single-family home, currently selling off market, of course. By the way, you have an opportunity to follow up and contact myself. First and foremost, please like and subscribe to my YouTube channel. And secondly, if you have not already done so, please, if you're new to my channel, you can put your email into my website below on the description. So you could sign up for our free newsletter and be part of our a large real estate investment network uh, uh, of like-minded individuals. Okay, so we can teach you for free all the real estate investing information, education contents, everything. And also, again, if you're really, really motivated to get a piece of the action on this strategy, please contact me directly, so we can talk. All right, so let's take a deep dive and yeah, this is truly just absolutely incredible. So it's 320K single family home, around 1850 square foot. As you can see, some of the pictures, 7 bedroom, 7 bath, 1 bedroom plus 1 private bathroom per tenant. Okay, this is workforce housing, which is this real estate asset class, co-living, is up and coming new real estate asset class, which in my estimation is going to blow short-term rental, Airbnb, mid-term rental, and traditional long-term rental out of the water. Okay, not only that, any other real estate asset class out there, fix and flip, burr strategy, uh, you know, uh, whatever, yeah, okay, uh, buy low, sell high, whatever asset class that you're thinking about doing, this is nothing in comparison to this real estate asset class co-living. All right, okay, let's go through the numbers. Okay, I'm not gonna. I have other videos I have done. You can learn more about it, but this is just pure number, which is a very important underwriting numerical scenario. All right, so here are the you put 20 to 25% down payment. It'll be a little bit more than 64,000 down payment. We collect uh, $1,000 per month rent per room, so a little bit more than $7,000 of gross monthly income, which is absolutely incredible. I will talk about the expenses momentarily, but at the end of the day, okay, based on this pro forma projection, your monthly net cash flow is around almost 1,900, maybe even $2,000 with a cap rate of 13%, which is absolutely incredible, and annual ROI at least 27%. So let's take even a deep dive. So I took the liberty of using my software, propertytracker.com. You guys can use the same software or any other software to do this very critical numerical analysis. So with that in mind, here's down payment at 25% down payment, I believe. Then you pay a closing cost, whole 9 yards. Total out of pocket for you is 87,000. I know it's not very cheap, not very cheap. And then you get a loan. The loan's estimated like 6.8%, 30-year fixed rate. It could be the loan programs are different with each person, as obviously. So $7,000 monthly. projected rent minus 5% vacancy. And then, so let's continue with that, right? Again, I put the numbers at 6.8% 30-year fixed, and 25% down payment. And here's the loan amount. Here's the monthly payment for you. All right. So far so good. All right. So and the fun part comes around. It's just incredible. Now, I have no time to talk about the uh, the numerical benchmark, but I will, from a high level, discuss this. Rent to value ratio, RV ratio is 2.2%. This is, any person that are ever involved in buying rental property, especially traditional single family home type rental properties, you would not even get close to the 1% rule anymore, 1% rental value ratio. But in this case, we have a whopping 2.2% rent to value ratio, which is absolutely historic. All right. And then a capitalization rate, same thing. For 14% cap rate. Again, I have no time to talk about what's behind the calculation. Some of you may not understand what is cap rate, but it's okay for right now. Just I'm giving you some high level numerical analysis. And cash on cash returns is 30%. It's extremely, extremely high return on your, and a lot of people don't even know it, the return on your overall investment. We include IIDD, which is inflation-induced debt destruction, as coined by Jason Hartman. It tells you about, by doing the loan pay down, and the whole perspective, you're getting even more of a return because your renter is paying down some your principal balance on an annual basis. So really, your total return at the end of the first year, in this case, is 60%. So this is the true benchmark of a total ROI, return on your investment. Your investment is whatever, as we mentioned, right? Your down payment, and minus your annual net cash flow. So your monthly net cash flow is 2,100, which is amazing. Your annual net cash flow is 26,000, right? We put down 5% appreciation projection, 5% multiplied by your purchase price, 320K, equals, as you can see right here, 16,000. Okay. Then we include the inflation-induced debt destruction, IIDD, and some of you do not understand that. It's okay. Another $7,200 in paper profit. Okay. So and then all right, so we add on the annual net cash flow plus the principal pay down and plus the inflation-induced debt deduction, another 7,200, plus the projected first year appreciation at 5%. I know this is just a projection of 16 grand. So you add up all these up and divide by your down payment, as I alluded to, which is right here, your down payment, which is $87,000, right? Okay. So very simple, equal 60% first year ROI, return on your investment. And this is absolutely incredible. I challenge you to do an apple to apple comparison on this new construction, iconic co-living rent by the room model with any other real estate asset class. And this type of investment model gonna blow everything out there out of the water, clear, blow out of the water. All right, that's how emphatical, emphatical. Did I say the word right? I am. Okay. Look at this monthly cash flow of in excess of $2,000. This is just, and I factor in 5% vacancy rate. We have a 16% property management fee, 8% with the past split that we partner with. They're doing all the marketing for us to get the tenant in, and we have a projected inflation rate 3%, and the whole 9 yards. Maintenance, we even incorporate the maintenance percentage 5%, even though this is a brand new high quality construction. All right, so and we projected a 5% rental increase for the next 10 years. So let's even go over the 10-year projection, which is going to blow your mind. So first year alone on this single family home co-living model, you're collecting $84,000 of profit of gross profit, that is before deductions. Okay, I mean 84 grand. I mean, this is absolutely incredible. And then if you incorporate 5% rental rate increase, your rent gonna increase 5% from year over year. At the end of 10 year, you're gonna have a gross profit of $109,000 before deductions. Okay, this is incredible. And then of course we go over the expenses, then all the fees they also tend to go up over the years, which is okay. We incorporate the maintenance and the whole nine yards. And here's the fun part. The fun part is, of course, you have an amazing 30-year fixed rate mortgage, whether you do a conventional loan or a DSCR, debt service credit ratio loan. You can do one of those two loan programs depending on your situation. And then here they look at the amazing cash flow based on the 5% rent increase, which is coincide with a 3% inflation rate year over year, right? So you can see the increasing cash flow over the years. You can keep on charging higher rent while your mortgage payment stays the same. So, and your tenant is paying, your seven tenants in this case will pay down your loan. Seven people could pay down your loans, and they and which is incredible. So as a result, you have a 30-year fixed rate. Your payment will never go up, but your principal balance will come down. So which is incredible. All right. So as a result, your capitalization rate is absolutely amazing, 13% right from the get-go. And over the year, over year, continue to be double-digit cash on cash, I mean, cap rate. Cash on cash return right now, 30%. The first year, you will recoup 30% of your total down payment plus closing costs. This is what cash on cash return means. So this number will blow any traditional rental out of the water, okay, clearly. Okay, so return on equity is already at 45% and so forth over time, and then your market value at 5%. Look, if you hold this property for 10 years, I mean, your market value right now is, for example, the first year 336 at 5% appreciation. At the end of 10 year, you almost have 521K. I mean, okay, not doubling, but close to 70% increasing equity in value over the past 10 years. I know this is just a projection. No one can predict the future, but the great thing about it is your loan balance, like I said, your tenant is paying down your loan, right? The tenant's gonna make you rich. That's historical, right? So your loan balance will continue to go down, and then when your market value increases, over time, of course, this is a long-term investment, and the loan balance kept decreasing because of the principal pay down by all your tenants, then your equity continue to grow, systematically, right? That's the amazing beauty of owning income property, right? Is a income property is a multi-dimension asset class, right? It's the most tax favored asset class, and it's truly amazing. Okay, uh, without a doubt. So therefore, your equity not only you can receive in excess of 20 something thousand dollars of annual net cash flow. But for some of you, if you are in the acquisition mode, if you are in the scaling mode, if you will, so you already have 25% down payment, which is 75% LTV, which is loan to value. Look at this. Let's assume you have the ability to cash out refinance, which is a tax-free loan, by the way, around the fourth, fifth, and sixth year based on 5% appreciation. So therefore, at 50% give or take of your LTV loan to value, you have the opportunity to refinance your loan to get the cash out to buy more rental property strictly from your equity, strictly from your equity. No longer you don't no longer need to pay find money for additional down payment to buy more properties. Your down payment is a one-time deal for most of you, right? Then the rest is over time is using the equity to cash out refinance when the LTV hits around 50%. Furthermore, and your annual net cash flow is already 23,000. So you save 2 years or maybe 3 years of net cash flow from the cash flow savings in the next 2 or 3 years alone allow you to buy another rental property strictly off the cash flow from the down payment. No need to put any more down payment, any of your money, one time initial down payment. That's it. Okay. Over time, you can leverage, you can create an amazing real estate portfolio. All right. And then, so here's the potential cash out refinance money, the fourth, fifth, and sixth year. If your goal is to scale into more property, then you use a cash out refinance or the 1031 tax deferred exchange, or use your net annual cash flow savings for the next few years to buy another property and another property over the next 10 to 15 years. And it just hits. Uh, all right. So I think that's my recap. And at the end of the day, this is a multi-dimension. This is amazing to have the ability to buy this kind of property. This is a new asset class. It's blowing everything out of the water. We are getting a lot of investor interest, a lot of sophisticated investors, even newbie investors are very, very excited to enter in this uh, co, uh, co, uh, co-living new construction model, which is amazing, which is the best type of investments. We have the teams on the ground. This is a almost like a passive investment. I repeat, this is a passive investment. That's if you want to, you don't have to spend any time, maybe 1 hour per month in managing your property, if that's what you want, right? Although you can be hands-on a little bit if you want, but this is almost like a passive investment model, and you're getting double-digit, triple-digit return. So, and then this is just a tip of the iceberg. I'm just merely there's so much to talk about, but this is it. Okay, I'll give you more information down the road if you follow my YouTube channel, if you become a member of my free real estate investment community by putting down your email on my website, with your email, and then of course you'll feel free to contact me directly to go over your situation. If you're motivated to buy one of these amazing limited inventory we have off market. And again, our organization, the Year Real Estate Network, is a leading provider of turnkey new construction, iconic, high return, passive investment co-living model. Oh, that's a handful. That's a mouthful, not a handful. Also, is a handful as well. All right. So if this does not get you excited, I don't know what will. So if you financially qualify to do this, right? And if you are motivated, if you're committed, hey, your future will change. This is just the tip of the iceberg. And right now we're doing in Jacksonville, Florida. We also have a duplex as well, which is I will go over my video presentation on my duplex model as well. But this is just the tip of the iceberg. We have many new construction type of a co-living property upcoming for in other areas of Florida and in Texas coming up. So this is the right entity. Our company are really fully in. We are the country's leading provider of new construction, high income, high return, turnkey new construction living model, which amazing to return. Thank you so much. This is SeeWing Yi from the Yi Real Estate Network. Please like and subscribe to my YouTube channel, and also become put your email below to become you, so you can become our free member of our real estate investing community of like-minded individuals. Thank you so much. Have a nice day. See you next time. Bye bye.